What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to my three stocks on sale series, where I specifically look at all the market volatility that we're going through right now. And I try to give you guys some ideas on some different stocks that are currently down a lot but might be worth investing in for the long term at today's prices. And I specifically look for companies that are either already dominating or at least have a very big chance of dominating their respective markets in the future, so that when we look back on it, we might be owning here some market leaders that we were able to pick up at today's lower prices. And to make things even more fun and interesting, I specifically look for one low risk stock, I choose one medium risk stock, and I also choose one high risk stock, so that I can also give you guys more variety in terms of risk reward depending on what you're looking for specifically. As always, though, this is just my opinion. I'm just doing this for fun to give you guys some different ideas. If you like these stocks, add them to your watch list, but always do your own research and make your own decisions. I'm not asking you or telling you to buy or sell anything. That is your decision to make. We're just doing this to have some fun, and I'm sharing my opinion with you guys. Stocks that I think are good long-term investments at these lower prices. So anyway, with that said, please hit the like button if you enjoy this series. That lets me know you want to see more episodes of this. I'll give you guys more stocks that I think are trading lower that are worth considering. And let's just go ahead and dive straight into this. We got a few stocks to cover here. All right, now kicking things off here with stock number one, that's going to be our low risk option. And for this one, I'm going with what is actually my own number one largest stock in my entire portfolio, and that is Microsoft, ticker symbol MSFT, who is currently going through one of their super rare dips that you almost never see in the stock, so I had to include it in today's episode. Now here's a 10-year chart to show you just how incredibly smooth and stable and reliable this stock has been over the years, but that dip at the end there, that really stands out on this chart as it's a drop of about 25%. And really, anytime you can get a stock like Microsoft after losing a quarter of its value, that's usually a great deal if you're thinking long term. Now, this is a company that not only did almost $170 billion in sales and over $60 billion of net income last year alone, which is extremely rare for any other company out there in the market to even get close to matching those kind of numbers. But as impressive as that is, I actually think that the most surprising thing about Microsoft is how they're still able to put up double-digit growth rates despite those really high numbers. Now, you're talking sales growth of 14% in both 2019 and 2020, even higher growth of 18% in 2021, and yet somehow this year they're actually expected to do even higher growth of 19% and then still do their regular 14% growth the year after as well. So that is very, very impressive. But when you look at their business, I mean, it makes perfect sense. At the start of this video, I mentioned that these stocks will have the opportunity to dominate a market. Well, Microsoft may be able to dominate several gigantic markets because they're so incredibly well diversified. You could look at gaming with Xbox and their Netflix-like game streaming service called Game Pass, and after their massive acquisition of Activision Blizzard, Microsoft has now acquired over 30 different game studios in just the past few years, so they're going to do very well in the gaming market over the long term. You could also look at work productivity, where they already command the most software market share in what is essentially a global duopoly with Google. And they're even a major competitor to Zoom in the video conferencing market, which has turned into a giant market with the rise of remote work, as even coming off of the pandemic, the percentage of US white collar employees that are working at least some portion remotely, that's still hovering at close to 70%. So essentially what we're looking at here is a giant amount of workers that are now doing remote work, and a lot of it is done through Zoom, a lot of it is done through Microsoft Teams, which is their platform that already commands the number one market share in 41 different countries around the world. For comparison, Zoom holds the most market share in 44 countries, so Microsoft in that scenario, or in that sense, is not too far off. Now, it doesn't even stop there, though. You could also look at artificial intelligence. You could look at cloud computing. You got Microsoft Azure that really does very well in both of those. They already command the most cloud market share in the world, only behind Amazon, and it's usually ranked second in artificial intelligence as well, just behind IBM. And something that I think a lot of investors and analysts are overlooking too is that all of these areas will be hugely important to the future of the metaverse, which is estimated to be worth a gigantic $13 trillion in its entirety over the next decade by Citibank Research as a total kind of economy there. Well, Microsoft already dominates gaming, dominate work productivity, video conferencing, cloud computing, artificial intelligence. These are all the individual markets that are going to build up the entire metaverse ecosystem. So don't be surprised in the future if Microsoft ends up becoming just as big of a play on the metaverse as a company like, say, Facebook, who is now called Meta, of course. Anyway, add it all up, and I think Microsoft stock trading at a quarter less of its value, that big discount, I think that's a pretty solid pickup for the long term, and it's not very high risk in my personal opinion. Moving on though to stock number 2, we've got our medium risk pick. And for this one, I'm going with Tesla, ticker symbol TSLA, which is actually kind of funny because this is my second largest stock in my portfolio, but I promise I'm not doing this on purpose. I'm not trying to be biased. I just look at the facts right now, and Tesla looks very attractive from a long-term perspective, and it kind of really fits in nicely in that medium risk category for me. Now, first of all, our gas prices have now broken all previous records and are insanely high. I'm sure you guys have felt it. Now, whether that's because of political policies or the crisis in Ukraine or whatever other reason, it doesn't really matter. The point is that it's something that we're very vulnerable to as consumers, and the result is that more and more people are switching to electric cars now more than ever. In fact, some studies show that EVs are now 3 to 6 times cheaper than driving gas, with a Honda Civic costing over $50 to fill up the tank, while a comparable Tesla Model 3 only costs less than $10 to charge, which is more than 4 times cheaper as a cost per mile for the Tesla versus the Honda Civic. That's pretty crazy. And that's driving huge demand for EVs. According to Time, more than 40% of US consumers now say that they expect to own an electric vehicle within the next 5 years. And more than 60% of consumers say that they'll own one within the next 10 years. Both percentages, by the way, are record highs. And speaking of record highs, EV sales in the US last quarter, they also broke a new record with year-over-year growth of over 75%, even while the overall auto industry actually saw a decline of 15%, leaving the only brands to actually post growth, well, they were all electric. And in Tesla's particular case, they actually grew their sales by even more than the broader EV market, with US sales growing by over 87%. And as a percentage of the total EV market, Tesla now makes up a mind-blowing 75% market share according to Kelley Blue Book, and literally nobody even comes close. So I picked Tesla in today's video for that dominance in the EV market because I think we all know at this point that it's going to eventually become bigger than ICE vehicles, as it's already more than doubled in market share last year, and it's usually estimated to overtake ICE vehicle sales by sometime in the early 2030s, especially with all the new requirements that states are implementing to increase EV adoption. I mean, California is even going as far as to like flat out ban new ICE vehicle sales in the future, and you also have President Biden continuing to face pressure to implement similar policies on the federal level. I think there's a lot of ways that the government might intervene in the coming years and try to convince people to switch over to electric. That could be a major tailwind for a company like Tesla. But that's not just the only thing they're doing. Tesla is also a huge play on solar energy in general with their work in solar generation and power storage. That's both on the residential and also the massive commercial level as well. They also have the giant logistics and transport delivery market to look forward to with the upcoming Tesla Semi. You've got the robotaxi market with their upcoming autonomous robotaxis, which Musk claims to hopefully mass produce in a couple years. They're even trying to enter the robotics market with the Tesla Bot, which Musk claims it could be an even more significant product for them than their vehicle business over the long term. Now, I don't personally agree with that. I think it could be a big growth driver. I still think the cars will be the main focus. But, if you're talking about the very distant future when robots become much more popular and you start to see them, rise up and you see them everywhere around, the Tesla Bot could definitely be a big growth driver for them. But while these things are just kind of extra bonuses to look forward to over the very long term, Tesla is already performing extremely well as a company. Last year, sales skyrocketed by over 70%, while net income grew by close to 700%, with last quarter being a record-breaking quarter for their profitability as well. Despite this amazing performance, though, the stock is actually down right now by over 37% from its highs and is sitting in the bottom half of its 52-week range. Now, there's pretty good reasons for that. There's a lot of heavy competition that is entering the EV market, and you're going to see that accelerate over the coming years. So that is a concern. But I just think that Tesla has done a great job of setting themselves up for a diversified, high growth future over the long term. And I gotta say, I like it at today's prices. All right, finally, that brings us now to the last stock of the day. This will be our high risk option. And there's definitely not many other stocks in the market that can match the high level of risk of this one, with especially how dumb I've been looking myself in recent videos for saying that I continue to believe in them and buy shares to hold for the long term, which I've definitely received a lot of angry comments online for that decision. But you know what? It's my decision alone to buy whatever stock I want. And this stock in particular is, of course, Palantir Technologies, ticker symbol PLTR, which is a stock that I started to buy myself when it first started crashing, but that crash has only continued month after month with no real end in sight at this point, as it's now fallen by, well, even just today, when recording this video, today alone, they fell by another 23%. But in total, from its highs, Palantir has now fallen by an unbelievable 84%, leaving it all the way down to a fresh new low. And there's several reasons for this, but primarily it's because of slowing growth for what was already a very highly valued stock. See, Palantir is known for providing artificial intelligence and data management and analytics services to both the US government with things like the military and defense, as well as health services and monitoring like they did during the pandemic, and really a number of other various applications. But they also work with many companies across the commercial sector to improve their business and help them run more efficiently and effectively. Well, the problem is that Palantir has never been a profitable company. They consistently lose hundreds of millions of dollars every year, which makes them very speculative and risky to own. But sales were at least growing by large amounts every year, and that's what made owning the stock compelling for the long term. However, you can start to see the problem here if we look at their valuation. In this case, we can look at their price to sales ratio and see that back in 2021, that PS ratio was astronomically high at over 46. So that number really needed to come down significantly, which of course it did. Today, it's less than 10, but even down here, that's still fairly high even for a growth stock. So what you really need is very high growth to justify it. And originally that's what Palantir was doing a good job of, with revenue growth of almost 50% in 2020, but then it started to slow down. 2021 dropped to 41% growth, and the next 2 years after are projected to be around 30% or less each. And what really spooked investors today in specific was their first quarter earnings report for this year. Now, sales did manage to grow above that 30% mark, but it was mostly fueled by their commercial segment, which soared by over 50%, while government revenue only grew by a much smaller 16%. And the reason why that scared investors is that, number one, government makes up the majority of their sales at around 54%. So seeing a dramatic slowdown in growth there will likely hurt their chances of becoming profitable, or at least delay it, which is something that we know is an issue for this company. And secondly, this slowdown in growth shouldn't even really be happening right now, considering the war in Ukraine and the rise in global conflict. If anything, the US government should be relying even more heavily on their services, but that just doesn't really seem to be the case right now. However, I still think that this is a good long-term bet for many reasons. First of all, the stock has already cratered by such a giant amount that I think the risk is dramatically lower right now than it was before. Granted, this might still be a falling knife and it may never recover, but I just really don't see that being the case. Palantir is consistently being granted millions of dollars in government contracts, even overseas too, like with the UK and other parts of Europe. And their commercial customer count has been soaring in recent quarters, so clearly they must be doing something right that businesses feel is worth paying a lot of money for. In fact, this last quarter, their US commercial revenue skyrocketed by over 130%, which continues to increase as a growth rate every single quarter. And on top of that, their customer count also soared over the past year by over 200%. So while government is a bigger part of their business, and I think those ties to governments will only increase over time, Palantir is still doing an amazing job of diversifying away from it so that they can still bring in high overall growth by tapping into the commercial sector when the government one is slowing down. And speaking of growth, while management has continued to reaffirm guidance of 30% revenue growth through 2025, I just think there are so many ways that they could surprise significantly to the upside from that low figure. New government and business contracts can get announced at any moment, and many times those contracts are highly unpredictable in terms of how much they're worth, and they could always be a giant amount that analysts aren't expecting. On top of that, Palantir is entering new markets all the time, and one market that I think may sneak up on us is, for example, the crypto market. One of Palantir's biggest services is related to anti-fraud and anti money laundering, stuff like that in the financial sector, which is something that the crypto market continues to be plagued with and is constantly trying to find solutions to. So don't be surprised if that ends up becoming a big growth driver for them over time too. But I just think overall there's rising global conflict. Businesses are always competing and trying to become more efficient. Health diseases, especially coming off of the pandemic, are always a big concern. There are so many growth levers for Palantir to pull. So with the stock down this much, I just think it's worth gambling on long term as long as we know the risk and as long as I have a long term vision on it, which is what I personally do have and how I do feel about this stock. Anyway, that does it for this episode of 3 Stocks on Sale. Let me know what you guys think about these down below. Do you own any of these? Are you considering any of these? Do you hate these picks? Let me know what stocks you guys like. Leave them down in the comment section because I might include them in the next episode. If you let me know what stocks you think are on sale, I might agree with you and I might add them to the next episode. So let me know down there in the comment section. I hope you're all doing well. I will catch you guys in the next video. Take care. Bye-bye.